Welcome to the September 17th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our nightly report. Hopefully it serves as a nice change of pace, as well as offers some insights to how we set up our charts, what time frames and indicators we use. On the daily chart, we try to keep it pretty simple, as we do with all our charts. There's a 10, 20 EMA, 50, 200 SMAs. Then we have a relative strength line and volume with a moving average. And on the weekly, it's the 10 and 40 week MA that we use the most, with volume and its moving average. So just a pretty simple setup. We focus on price action, volume, and use moving averages to gauge the strength of a trend and to locate low risk entry points. All right, in tonight's video, we're going to run through a few broad market averages, then we'll cover open positions in the model portfolio, and finally we'll take a look at what's out there in terms of new setups. First up is the NASDAQ composite, which after several days in a row of lower highs and lower lows, it finally set a higher high today following yesterday's higher close, but there wasn't a higher high, but it was a nice reversal. It reclaimed the 20 EMA after undercutting 2 days worth of lows. And on Thursday, the price undercut the 20 but closed back above. So positive action the past 2 days. And on the weekly chart, it's potentially forming a hammer type candle with the price action undercutting the lows of the past 2 weeks and reversing higher. The S&P 500, which is still a bit weaker, has yet to reclaim the 20 EMA and has yet to really tighten up on the daily. Basically, we have 1, 2, 3, 4, 5 days in a row of wide price action sandwiched between the 10 and 50-day MA. Overall, I think as long as the price holds above the 50-day MA, and the S&P doesn't just fall apart here, it's fine for it to lag, so long as we're seeing leadership from the NASDAQ. As for IWP, which represents mid-cap growth, it broke its downtrend line after closing back above the 20-day EMA on Wednesday and putting in a higher high on Thursday. So far, it looks pretty good, and it's leading the market higher, which is what we want to see, as growth stocks are what we like to focus on in our trading system. As for open positions in the model portfolio, we are along AFRM from an entry around 111 after printing an NR7 tight range type day here on Wednesday, pushed out on a pickup in volume, good sign. We're still long D-Dog from an entry around 134 a few weeks ago. That's a half position in D-Dog. ZI we purchased over Wednesday's high, and the price set a new all-time closing high on better than average volume. And finally, we have Tesla, which we entered per intraday alert on Thursday. And what we like here is the big reversal candle on 9/13 with the price action holding above the 10-day EMA, and the bullish reversal on the weekly. So in the short term, we're looking for the price to chop around the 740 area to 760 until it can bust out from here and move higher. So with the NASDAQ and IWP looking pretty good and reclaiming the 20-day EMA, we've begun to add some new longs this week. So let's take a look and see what's out there in terms of new setups. AMD is a bit of a laggard in its group over the past few weeks, but that's because it was digesting a pretty decent move here. And during the summer, it's been chopping around with volume drifting lower, which is a positive sign. And the price reversed off the 10-week MA this week. There was a bullish reversal candle on 9/13. Decent reversal action on 9/16. The 10 and 20-day EMAs have tightened up here and have pinched together. If the price can pop through, this 3-day high could be in play. And that would also break a short-term downtrend line. AMEH is interesting. Had a nice downtrend line break and the price reclaimed the 50 MA on a pickup in volume. Stalled just below this 100 area, so could be in play above 100 or potentially on a pullback to the rising 10-day EMA within the next few days. ATKR is interesting. Had about a 25% deep base and it just rallied off the lows. Pretty strong advance, 50% or so in 4 weeks. But stalled at just below 100 and has pulled back the past few weeks on declining volume. And on the daily chart here, there's a downtrend line break on 9/15 with the price reclaiming the 10 and 20-day EMAs after they've pinched together here. And there's a slight pullback on 9/16, but look for the price action to hold above this 89 area and then turn higher possibly Friday or early next week. DLO is a recent IPO with a breakaway gap on big volume on 8/19. Since then, it struggled to move out, had a false breakout, and has pulled back to the 20-day EMA for the first time. Broke the downtrend line with a higher close on 9/14, and since then, it's just chopped around the past few days above the 20-day EMA on declining volume. So if the price can push back through Thursday's high, look for DLO to possibly test the 70 area and then move to new highs. MELI, false breakout above 1900, followed by a 4-bar shakeout, which undercut the prior low, reversed to close back above the 20. Tight action the past few days, did push higher on Wednesday and reclaim the 10. And stalled on Thursday, but this is an interesting setup as MELI is still above the downtrend line. On the daily, here's the hourly downtrend line, and it's pulled back right into the 20 EMA on the hourly, which is usually a big support level. And what we're looking for on Friday would be for the price action to open at or above Thursday's close and then punch through Thursday's high. And that would trigger a buy entry. NVDA looks interesting. NVDA has pulled back to the 20-day EMA. And has spent the past almost 2 weeks just testing support at 220, which so far looks like it's holding. So we have this downtrend line here, and that could lead to an entry somewhere around this 228 area. But I think the better entry is somewhere around this 223 to 224 area. And the last chart of the night is DKNG, which has formed a pretty wide 46% deep cup with a handle forming here. And one quick easy way to tell if this is a legit handle is by locating the midpoint of the pattern, which is right here, 57. So that's the midpoint of the cup. And then we find the midpoint of the handle. And so we have the midpoint of the cup around 57. The midpoint of the handle is around 61.50. The midpoint of the handle is above the midpoint of the cup. So this is a legit handle, as handles should slope lower and be at least 5 days in length. So that's what we have here in DKNG. Let's go back to our main chart here. We like the pullback to the 20-day EMA. Tight action inside day on Thursday. A move through the 2-day high is the trigger. All right, that's a wrap for tonight's video. Thanks for joining me. Have a great weekend, and we'll see you again next Friday.